everyone, and welcome to this week's installment of Mish's Market Minute. I am your host, Mish Schneider, sponsored by StockCharts TV. So I think I say this every single week, but we have another action-packed 29 minutes to fill. And I thought that we'd focus on, since there was 120 names, give or take, of stocks that have reported earnings. And of course, we have the whole controversy going on about the Reddit traders, which we're not even going to get into. I thought this would be a good focus because the earnings are out of the way, and then we can have a good look to see what we might do once some of the volatility in the market calms down. Because right now, of course, as we know, the market is extremely volatile because of everything that's going on. So what I did was I picked 25 stocks from the week from January 25th until I'm doing this interview with you at January 28th. And I decided to put them according to different sectors. So we're going to cover some in healthcare, industrials, communications, FANG, tech, financials, defense, and air and cruise was sort of as one category. And as always, I like to give you the list of the symbols so that you can go back if there's any particular stock that you want to look at. So I go everything from Johnson & Johnson down to Carnival Cruise Lines at the end and everything in between. So this should be a really good way not only to see what's reported and how it looks, but how it fits into the macro picture, which I had explained to you last week, showed some stress in the transportation sector. We saw the sell-off in that particular area. And yet at the same time, some other strength in some other pockets, and that the junk bonds were still holding up too. So this market really doesn't know what it wants to do. Stock picking is the game right here. So let's start with Johnson & Johnson. And this reported earnings, obviously you can see a couple of things here. It's well outperforming the benchmark. The momentum is doing well. There's no divergence whatsoever. In fact, the last high here matched the high here. And even though the high is a little bit lower, the momentum is still showing it's increasing. So again, I usually like to look at these type of situations of trades where I have a good risk on a major moving average. But the moving average being so far away doesn't necessarily mean that you have to miss the trade. It just means that it's best at this point to change your time frame, so you're not necessarily looking at a long-term swing trade. Of course, if it turns out that way, you'd be prepared for it. And that means also that if you're looking to shorten your parameters, then you also need to shorten your risk. And so what really makes this interesting is after a report, it gapped up. Then it sold off the next day. It's getting an inside day on the day that I'm talking to you. And I like that because what that means now is you have a good short time frame. And by the way, if you do not have a piece of paper and pen in your hand, I highly recommend you get one. So at this point, if we clear over this 170.92, which the high of the day I'm talking to you is 170.85. You can buy it over that 170.92, but I would be a pretty tight risk here. Maybe I wouldn't go just to the low here at 167.45. I would go somewhere between there and this high here at 166. So maybe I would make my stop somewhere around 166.50, and that would be roughly about a $4.5 risk. So that would make sense because if this is going to continue, you'd want to see this go on to making new multi-month highs. And just for the heck of it on this one, I'm not going to do it because I won't have time on everyone. We take a look at the weekly chart. We are really looking at, if we go back 5 years, new all-time highs. So we're in uncharted territory. So let's go back to daily. Okay, now next stock I've got here in the healthcare sector is an old favorite of mine that I haven't traded in a long time. It's Stryker Corporation. And that looks very different than the Johnson & Johnson because, as you can see, this is in a caution phase, which means it's broken down under the 50-day moving average, number one. The momentum started to show divergence here, kind of like what I showed you with IYT, where the divergence means that the momentum is under the 50-day moving average or the blue line, while the price is still above the 50-day moving average. And of course, you want to see where that reconciles. Now, at this point, with it being back under the 50 and it underperforming the benchmark here, at this point now, we would be looking to see whether or not it goes down much further than here. And I would probably say with the last swing low back on November 12th, this is 60 plus days more. So that means if we take out the low from this day, which is 222, and then swing back around, that could be an opportunity to get in with a tighter risk. Or if you just want to play it really safe, then you would wait for this to go through at whatever correction it's going through. Make sure it doesn't break down under the 200-day moving average and momentum, and get in when it returns back above the 50-day moving average. The next one is Edwards Life Sciences. This is another one. I haven't traded some of these stocks in a long time, so I thought it would be fun looking through the list and coming up with some new material. And this one also is under the 50-day moving average, also had shown a divergence here before the price broke, that it broke down in the momentum under the 50, getting a pretty decent sized correction here. So again, now we can start looking at that 200-day moving average, and we want to see that the momentum holds the 200. So if the momentum can hold the 200 here and it starts to blip back up, when I say blip back up, it means this red dot would be, the next one would be higher than this red dot. Then you can see where the price is trading. And at this point, your closest risk really is your 200-day moving average. So depending on where you might get in, if it consolidates down here, let's say it breaks this low here at 78.34, which would break the 200 and then comes back through. Any way that you can see your way into a decent buy signal after this sell-off, it would have to be somewhere where you would not only want the momentum to hold, but you'd want the 200 to hold. And the last one in the healthcare area is United Healthcare, because I've actually talked to you about this one. This is based on, this was on my mega outlook for 2021, in that the guess was that the Biden administration would be friendly to some changes in the healthcare, going back closer to affordable healthcare. So if that's the case, then this is a good one to watch now that it's reported. It's under the 50-day moving average. As you can see, the momentum, though, is still showing a sharp divergence, as that it's under the 50 and the 200-day moving averages. So we want to see a little bit more perkiness in the momentum. It is starting to come back after underperforming the benchmark. So again, if you were going to get involved with this, wait for two closes back over the 50, and then I would probably use a risk underneath this low, which is at 329, because it also matches down with this low down here, which was 327.96. So that's kind of your ballpark area. I wouldn't wait all the way for the 200-day moving average. So that's probably, other than Johnson & Johnson, if you're a momentum trader, this one would be the most interesting to me of what I just talked to you about in that sector. So the next sector we're going to go into now is industrials and metals. So we're going to start with FCX, which has had a great run this year, an unbelievable run this year. Freeport McMoRan. I think I've actually shown you this one before when we've talked about metals. And actually, your buy opportunity comes on the day I'm talking to you. This is exactly what I'm trying to tell you about these other charts. If you break down under the 50, but you hold on the 50, that's one thing. Even if you break down under the 50, but you come back, you now have a unique opportunity, even though the momentum is still weak, to have a pretty tight trade here. So in this case, if you missed buying it, because you're just listening to me now, 26.38 or 26.50 was the high, and it cleared that high on the day I'm talking to you with a low of 26.31, now trading 27.55, but the high was 27.90. So you're somewhere between 28 and 26.50 is a buy area. And then you could risk to under the low of 24.71. And if it breaks the 50 again and breaks that low, you're gone. If it holds and starts to come back up, you can see what happens as it gets closer to the highs here, up around 32.50. So that's another one I really like. I'm writing them down myself as I'm talking to you. SCCO, that's copper. Another different type of way of playing it. This is Southern Copper Core. This looks different than FCX, but look at our negative divergence here. We're underneath the 50-day moving average. We're underperforming the benchmark, but we're over the 50-day moving average. So I actually like the FCX play a little bit better. What would make me like this is if either the momentum comes back over the 50 or the price breaks down under the 50 and comes back through, and now we're no longer in divergence, but we're sort of matched momentum and price. Next one is Consumer staples. I put it under industrials, but it's a non-durable home product. This is Kimberly-Clark. Now, this sector has been under pressure, and I actually started thinking about consumer staples, XLP in particular. I was also looking at Procter and Gamble for instance, because I was kind of wondering whether they might get the benefit of a short squeeze. But we don't have to think about that. This reported, it's out of the way, and look what's happening here. We're not getting necessarily a divergence because the momentum is over the 50 and so is the price. We're kind of right in line, and you're squeezed between the 200 and the 50-day moving average. So that tells me right now that you want to see 135.50 hold. You want to see the momentum hold, and if the momentum starts to move up, yes, of course, you can wait for this to take out the 200 at 140.75. But if you want to try to get in a little bit earlier than that, I would probably say somewhere between 139 and sorry, just doing a little calculation here. Between 137 and 139 would be a good buy zone, and you could have your stop right underneath this low right here. Again, I would probably at least want to wait another day to see what happens with the momentum in this one. But as consumer staples go, it's not a bad thing to be taking a look at in general, besides the one I just told you about. Then we have STLD. This is steel. And I usually watch X, but I thought this one was interesting because look how this has tanked. So it's the same kind of situation. If we can get down and hold this low, let's say right here, or break this low, which is, by the way, at 32.41, a couple of dollars away, and come back around, swing back up, and a hold of the 200 here with some improvement of momentum, you might have a unique situation, particularly in a commodity, stock-related commodity, to get in and lose your risk against the 200-day moving average. But I'm not saying to do it now, but this would certainly be something to keep an eye on any further correction. Okay, another industrial a little bit different. This is Textron. And this too was rocking and rolling. And again, now if obviously earnings weren't that great, this is an industrial. So, this will be something that if the economy improves, if the Fed continues to be accommodative, if businesses start reopening, this could be something that could be relatively interesting to look at. It's got an inside day right here underneath the 50 with negative momentum, but not divergence. And you can see it's starting to come back a little bit. So how I would look at this one right now would be after the inside day, I would probably want to see at least some move back over 48, which would put it back over this bar right here. So let's say 48.50. And then I would actually stop myself out very quickly here under the low today of 45.61. But again, Textron would be more of a play on some kind of more optimism about the economy. And I added an oil stock in there because Valero is getting involved not only with biofuels, trying to change their image. It actually looks pretty darn good here on the chart. The only thing that concerns me right here is the fact that we broke down on the 50 here in terms of momentum, but not in terms of price. So I would give this maybe a little bit more time. First of all, I'd want to see the momentum improve. And by the way, how do you see the momentum improve? Simple. You buy our ACP plugins on StockCharts because these are unbelievable. And how I have found some amazing trades during the course of the several months now I've been doing this for you. So a lot of you know some of those trades I've picked out that have just rocketed based on these momentum divergence. So that's my little 10-second commercial here for the plugins. But nonetheless, since you do get to hear me every week, we have a nice upward slope here on the 50-day moving average. We seem to have some pretty decent support around this 57 level. If this momentum flips back over the 50 and this can hang out, I'd probably wait for this to move back over 60, risk under 57, and see if this thing can continue to go up. I like this stock. I'm writing this one down for myself as well. Okay, next one is now going into communications. We're going to look at Verizon. And boy, communications in this sector looks pretty darn awful. Whereas Viacom, which is a stock I did give you, which has done very, very well, actually doubled pretty much in price. This has done just the opposite. It's really been weak. And look, no divergence underneath all the moving averages here, underperforming. So what would I do with something like this? I would probably say at this point now, since it made a new low since the last time being down here in July, this could mean that the stock is just totally sick and that's that and just avoid it. Or it could mean that we go down a little bit more and we turn back around, leaving a tradable low on a 60+ day new low. And then you would have a much tighter risk to see if it can get back up over the moving averages. I would say that that's probably for your more advanced traders, though, not necessarily for a lot of the people who haven't listened to me before and now are listening to me for the first time and don't really understand how we're doing all of this. So now let's look at Microsoft and go into the big tech and the FANG. So Microsoft, I, of course, was negative on. When I say negative, at the point I was talking to you, it had a negative divergence. And it even confirmed in price, but it didn't really go anywhere. When I started seeing it, actually, you had a little bit of money if you got in at like 225 and covered by the time it got back over the 200, excuse me, the 50-day moving average at like around 220, 219. Not enough money to really write home about. But I have been very vocal about saying that I believe that the potential for these stocks are not that great. So yeah, it's up. It's up since it reported earnings. It reported earnings well. It's involved in some interesting things. The momentum here is starting to actually do pretty well, although still well lower than where it was here in momentum when the price was that much lower. I'm going to stick to my guns here that this maybe, and what I had said was from 225 had maybe a 20, maybe a $20 to $40 move higher. So right now we're at just not even at the $20 zone. If we can get up anywhere between $20 and $40 higher from there, so that would be like anywhere between 240 and 260, and then we start to turn down, to me, I would actually still believe that that could be a top. But right now, you don't want to fight a trend. Absolutely. I'm not suggesting shorting it unless this thing seriously reverses. And Apple's another one. Beat everywhere, top and bottom. Great future in terms of innovative products, but the price has actually turned down. Now, this is probably one of the better FANG stocks, I think, because they're constantly innovating. Now they're getting into the healthcare industry, et cetera, et cetera. But this also, with all of that, it basically couldn't even take out the high from here, number one. Well, it did. The high here was 137, but not by much. It got up to 145. The momentum is bleh. It's actually closer to the 50 and the 200-day moving average. So this would have to also, it'd have to give me some kind of a sense of the momentum is really starting to incline. What this looks like right now is that people are buying, but the velocity is kind of dying. The interest is kind of dying. This is just not where the excitement is. So with Apple, though, some people believe that this stock is just going to always go up and any correction is a buy. And if that's the case, I would rather see this get closer to the 50-day moving average. I certainly wouldn't be buying it up here. Facebook is another one. Bounced off that 200. You see how nice that is? Even though it's still in negative divergence. Look at that. This is still underneath both moving averages, and yet it's above both moving averages here in price. So you know what this tells me? I wouldn't touch this thing unless I got a good opportunity to go short. And of course, we know one thing, going short these days is pretty scary because all you have to do is become the target of the short squeeze. And the next thing you know, you're in serious doo-doo with your short position, unless you just do a put and you have a limited amount of risk. Now, I would say I wouldn't buy this. I certainly wouldn't buy it. But what's more interesting to me is the theory that I've come to you with many, many times now, which is big tech is dead and new tech is all the craze. All right, let's move on to Netflix, which reported actually the week before. Now, Netflix is a little bit different. It's a FANG stock. Netflix, of course, has a tremendous amount of content. I mean, pretty much everybody I know watches everything on Netflix, and it broke down under momentum and has come back. That's a good thing. So it bounced off the 50-day moving average with an inside day. By the time you see this tomorrow, if it gets through 556 and you were so inclined to potentially buy this one, I would say maybe that's not a bad idea, except that I would be really nimble if it can't hold. And I wouldn't wait all the way to the 50. I would say really this thing has got to hold around 525. So we're looking at $30 risk, but Netflix has a huge ATR. So I wouldn't say don't buy these big stocks when they set up. Just buy very few shares so that you don't wind up hammering your equity if they go bad. Next one is Tesla. And Tesla, of course, reported earnings. And even though they're starting to monetize in certain places, you can see we have this gap based on the earnings after making a new high. But it hasn't really gone down all that much, Tesla. So at this point, I mean, it was actually started out the day at 822, and now it's trading at 840. So it's already bounced from the low of the day. But nonetheless, if you're going to play the Tesla game, you just got to be really nimble. I had mentioned that 700 was the breakout, and then it got all the way up here to the high of the all-time high that it made at 900, and now you're $60 lower. So what I would want to do is I'd want to see, where does the support come in? The low today, as I mentioned, well, actually it was 801. I didn't even see that. And if you go back to the low here, it was 803.60. So what do you have? You have 800. That's what I would base it on. But it's interesting here that the momentum has not actually broken down, although it's gone way down, and there is a divergence. But if it could pop back up and this 800 level can hold, that may be a chance to at least try to play Tesla. Now we're moving into the financials. Here's Capital One Financial. Again, this reported, had a really nice correction. The buy opportunity probably would have been the day I'm talking to you, except that you can see now that it's got an inside day here. So over 108.22 on a Friday, when you hear this, could be an opportunity, but you're going to have to risk about 10 bucks. But in the stock that's moving like this, that probably makes sense. You also would really want to see this hold here, the 50-day moving average, and you want to see this start to overtake the SPY. But Capital One Financial, not so bad. All right, next one is American Express, also reported. And again, sold off. But you see this big gap here? So really this whole thing is looking like a big gap that's holding up. So really your risk now would be under this low here at 109.17, and it's starting to take back that 50-day moving average. I would just give it maybe a little bit of time to see if we can get a close above it 2 days in a row and what happens here with the momentum. But American Express, if people start spending money again, that also could be a good one. And the other one that goes hand in hand with American Express, of course, is Visa, which looks worse. So Visa actually is now bouncing off of the 200-day. It's well below it on the momentum, and look how it's underperforming. So you had a new 60-day low here on this low at 193.96. We popped out over the 200. Again, if you wanted to take a chance with Visa, you would want to see this close a second day over the 200. And I really would not risk much lower than this 193.96. So that could be an interesting play too. Again, you'd have to be a believer, though, that people are going to get stimulus money and start spending it again, because right now people are hurting. Let's now go to eBay. I just wanted to throw eBay in there because it reported. And of course, again, it went up. And now you can see it's coming off after the report, but still holding here. I wouldn't have any really great recommendation. It's sort of right back in the middle, but it's good to watch. And the also interesting thing is, look what happened here. We had the high here back in July at 60.69, and we had the high here at 60.55. Double top? Who knows? Good launch pad if it takes it out? Possibly. Possibly. That would be a number at least I would keep my eye on if you're interested in this stock. All right, moving to defense, we've got Lockheed Martin. This was another one I mentioned in my 2021 outlook. Look at how beat up this is. But again, what we'd want to see is a new 60-plus day low. We got one as of this day right here at 329.67. We're getting an inside day on the day I'm talking to you. Momentum is weak, but it looks like it's starting to level off. And if it takes out 335.73, then you have a good risk to the low of that day of 329. In fact, this one, of everything I'm showing you, considering I had talked about it, it's a good possible high short float. It's got a bottom, a low, a big low that you can use as a risk. I like this one. I would keep my eye on this one. Now, American Airlines reported, and the stock went crazy in the morning. It did one of these crazy sticks that make it very hard to figure out. But nonetheless, 20 is going to be pivotal, and your support is going to be somewhere around 16.15, which is really basically where the low is today. So I would give this a little bit of time to digest, but really not so bad considering you had to go through earnings, unfortunately, but it went right down to this 50 and popped up. So this is a good example for looking at things that do that in the future, even if you don't trade this one. And another one I had put in my Outlook 2021 was Northrop Grumman. And that, similar to what we just saw in Lockheed Martin, well, it hasn't made a new 60-day low. Well, actually, is that true? No, it has not. So right now, basically what you're looking at here is, can this get back over and show a divergence positive in momentum? And if so, would you be able to see it get closer to the 50-day moving average if you wanted to wait for that, or at least have some kind of a risk parameter? Again, not quite an inside day today, but close. If it got back through, let's say, that 300 level, you really can't risk much more than this low right here at 286. I like the Lockheed Martin formation much better. Okay, another airline, Southwest. I get daily emails from Southwest about their cheap flights, underperforming, definitely no divergence here, negative under the 50-day moving average. But once again, possible new 60-day low, trying a little bit harder than the other ones I showed you, and you got your 50 right here. So if we can get back into a bullish phase, maybe you would have a good area. You would either risk to under the low of the day that it has two closes over the 50. In other words, if it moves over the 50 one day, and then the next day it holds over the 50, whatever the day was that it moved over the 50, that low could be your risk, which would make it much tighter. And if you wanted to sit with it, at least you can go down to around 43.87. So that's another one to keep an eye on. And last is Carnival Cruise. Because let's face it, if you really want to see the optimism of the economy going forward, you're going to have to take a look at the cruise lines and the airlines. People are dying to get back on cruises. We're starting to do a little bit better in terms of the performance. We seem to have found some kind of a base in the momentum. The price is closer to the 50 than the momentum. So again, this would be a very easy 2 days close over this 50-day moving average at 2062. And then whatever the low is, and it even could be today's low that I'm talking to. Yeah, this kind of pierced, although it didn't quite clear it. But again, now at least you have some tradable low at 1966 if we can get to two closes over that 50-day moving average. So that's a good way to be looking at these earnings seasons right here. And I gave you a whole bunch to watch. I like CCL as well. That would be another one on my watch list. So I hope this was helpful to you. Hope you all have a wonderful weekend. Thanks so much, and see you again next week.